the first time. My name's Paul Middleton. I'm a Managing Director within Protiviti, and I'm joined here by my colleagues from Protiviti in the UK and from Robert Half in the UK as well. So for 10 weeks now, we've been calling this our collaboration forum, and that is hopefully what you've achieved and what you continue to achieve and what we'll continue to achieve from this. We adapt the themes each week to meet what you tell us is important to you, but the aim remains consistent. The aim continues to be to look beyond the headlines and focus instead on hearing and discussing those practical stories, the insights and innovations around how businesses and people like all of us have adapted to meet the challenges of COVID-19. And in doing that, hopefully some of you have been able to join the dots to your own challenges and have what we have described last week as a serendipity moment where the insights you hear can help in your own decision making and give you greater confidence in making the right decisions. So last week, we focused on some of the technology tooling that might be relevant to businesses of all kinds at this time. And this week, as normal, we have a few panelists from across the market to bring us more perspectives. We're going to hear from UK Finance around the current imperatives for the UK finance industry, as well as the challenges it's facing. We're going to hear data-led insight from Sidetrade, an AI company that helps clients understand and accelerate its cash flow, who will show us how the shape of the UK's debtor book has changed over the last few months and what that's likely to look like over the next few months. And we're going to hear from the CFO of KFC, a business that we all know and love, around the steps they've taken and challenges they're facing as they have just opened 500 of their stores in the UK. We're also joined by Layla Tyndall from Robert Half to give the usual global recruitment barometer, as well as by Protiviti's Global Head of Digital and Innovation, Jonathan Wyatt, who will be adding a Protiviti perspective to the insights we hear. So we have a busy agenda as normal, some fantastic panelists, and I think there'll be some really great insight, inspiring and useful stories that we hear, and hopefully you'll be able to apply to your world. For those of you who don't know us, Protiviti is a change management consultancy focusing on technology, risk, internal audit. We specialize in managing risks in your businesses, including operational resilience and helping you face the future with confidence. So it's to be no surprise that the audience here is largely drawn from a number of people who come from that risk world in many guises, but also in collaboration with our parent company, Robert Half, we have a wider audience bringing people across financial services, charity, manufacturing, food, public sector, retail, technology, hospitality, media, and many more. So welcome to all of you. Before we kick off, a little bit as normal on the logistics of this forum. As normal, it is Chatham House rules. What that means is, please use the perspectives you hear, but please don't attribute those viewpoints to anyone in social media channels or otherwise. Secondly, this is your forum, and I can't stress that too much. Please share your perspective, ask your questions, disagree or agree with what the panelists say, and give your point of view. But please interact and make it as useful as possible for you. You can do that in a number of ways. We will, from time to time, we'll pause and I'll ask the audience. So I'll ask you all if you have any questions, and so please speak up if you do. For those of you who are on the phone, who've dialed in using your mobile devices, you may need to press *6 to unmute yourself. We had some audio gremlins last week, but if you want to unmute yourself, you're on the phone, press *6. For those of you who are dialing in using your PC, please speak up, or also use the chat panel on the side. Just hover over the chat and type your questions, and my team and I will just bring that back to the panelists as we go. So without further ado, I'd like to turn to our usual weekly recruitment barometer and bring in Layla. Layla Tyndall, who's a Managing Director in Robert Half Executive Search Division. And Layla, you gave us last week some statistics and trends around what you've been seeing on the global recruitment stage that can shine a light on how the different geographies are recovering and the different industries are recovering. Could you just give us an update as to what you've seen over the last week, please? And you're on mute, Layla. Best laid plans.
Yeah, absolutely. Good morning, everyone. Thanks, Paul. As Paul said, over the last 3 weeks, we've given a few statistics of what we're seeing at Robert Half globally. Recruitment, as a lot of people know, is a lead indicator of how markets are doing. And so as the pandemic hit, and for a lot of industries, the numbers were going down, as we've started to stabilise, we thought it would be helpful to share some of what we're seeing globally, which is perhaps some good news as things stabilise. So last week, I gave a bit of a backdrop about how we dropped, overall revenues had dropped anywhere between 30 to 45%. Very, very quickly for us as jobs went on hold, businesses had to focus internally. And over the last few weeks, we've seen the numbers coming back. So last week we reported week on week sequential growth. And over the last 3 or 4 weeks, that's gone from 11 to 12 to 16 to 17%. And actually this week again, we're seeing a similar number to last week. So I'll start with the UK first. We operate in a number of divisions across permanent and temporary and interim sectors, and we overlay at the top with the executive search practice. So starting in the UK, in our technology division, we've seen job flow increase of around 16%, 17% overall permanent job flow increase, which is similar, a little bit higher than last week, but largely similar. However, in our temporary divisions, we're seeing quite a significant uptick. So this week we've seen a 23% increase. 2 reasons behind that, I think, as businesses are looking to return and talking about their reimagination phases. I think there's still, some caution around where people are looking to hire and plug skills gaps. But that's a significant uptick, which just shows certainly a confidence coming back. So globally, I think we said last week, and it's largely similar, our Asia businesses are pretty much at kind of 90% of pre-COVID levels and continue to grow. Our US business, again, up around 70% pre-COVID and continuing to grow as well. On the search business, actually, we've been relatively steady. So it's a slightly different level, I think, as businesses are looking longer term. The board level appointments we're seeing are relatively unaffected. So businesses are continuing with hiring at board level as well. So the overall message is that I think businesses, as they look to return, it's the reimagination phase. There's a general confidence in the market, and businesses are continuing to hire. There is one more caveat to that, I would say, on our temp business. I've just seen my notes here. At Robert Half in particular, we've managed to deploy 95% of our interims and temps globally with laptops and Surface Pros. So our numbers in particular are slightly higher than the industry standard on the temporary and the interim side because of that. But largely, I think the same message as last week: stability, cautious confidence, and let's hope it continues. Thanks, Paul. Back to you.
Layla, thank you very much for that. There's a question coming through on the chat, if you wouldn't mind just taking that, and thank you for that. And maybe just kind of put a written response in there. So I'd like to turn to our panelists now. We have 4 panelists today. Firstly, I'd like to introduce Andrew Rogan from UK Finance. UK Finance, for those of you who don't know, is the collective voice for the banking and finance industry, representing more than 250 firms in the UK. Andrew and his team work on behalf of members to promote a safe, transparent and innovative industry, offering research and policy expertise through thought leadership and advocacy to bodies such as governments and regulators. Andrew himself is an executive director in UK Finance and has been with them for almost 3 years, having previously been a policy director at the British Bankers Association and worked across a number of different government departments. So we're delighted that Andrew can join us today. Secondly, I'd like to introduce Sonil Pandit from Sidetrade. Sidetrade, for those of you who don't know, uses AI to accelerate and improve clients' cash flow by collecting millions of data points around unpaid and paid invoices. And Sidetrade has used some of this data to chart and change the quantum of unpaid invoices during the pandemic and the changes in debtor days. And it's that we're going to dig into, because I think that gives some fascinating insights into how the economy and how the environment has changed. Sonil is the Strategic Partnership and Alliance Manager at Sidetrade and has been with them for a number of years. He also has held a number of senior sales and partnership roles at IT and software organisations. So we're delighted he's joined us today. And as we speak with him, we'll also be showing some graphs on screen. So if you are able, please enable your video in Teams and you'll see some of those graphs come through. As I mentioned before, we're also very pleased to welcome Chris Giroux, who is the UK and Ireland Chief Financial Officer at KFC, which is part of the Yum Group. And the Yum Group owns other brands such as Pizza Hut and Taco Bell. Chris has been with the Yum Group since 2013 and held a number of senior financial positions across the UK and Europe. And lastly, we're joined by Jonathan Wyatt, who is the Global Head of Protiviti Digital and Innovation based in the UK. Jonathan's been with Protiviti for over 15 years and specialised in helping organisations manage the opportunities and risks presented by disruptive innovation and exploring ways of embracing new technologies. And so we've asked Jonathan to join us today and to comment on what we hear and how we should approach innovation as we begin to remobilise. So I'd like to just turn now to the first of our questions and go first for an industry perspective, specifically the finance industry with Andrew. Because obviously the finance industry underpins so much of our country's resilience. Andrew, you chair the UK Finance Business and Operational Continuity Committee, which is part of the overall sector response framework. So I wonder if you could start just by giving us some insight into where your members are in terms of shaping their support for people and businesses in the UK as we start the recovery journey, as well as some of the specific challenges that are currently faced by your members.
Yeah, okay, Paul, thanks very much for that, and greetings to everyone. And first of all, thank you for the invitation to come and speak to the attendees and share some learnings. I'm looking forward to taking some away myself. Look, we live in absolutely extraordinary times. I don't think anybody needs me to say that. And the truth is, we've been living it for about 8 or 9 weeks, depending on when your own firm took the decision and put in the various mitigants in place to deal with the situation that we're currently in. The Business and Operational Continuity Committee is a member committee that we have at UK Finance, which is our primary engagement forum with the members, but also it's the conduit through which information flows from the regulators, directly from the regulators to our membership, and from the membership and to the regulators. It meets weekly, and we discuss a range of operational challenges and have been doing so since February when this situation first arose. I think it goes without saying that this has been an absolutely Herculean task on behalf of the financial services sector to go from a previous operating stance to the way that we're actually working now. And I think it's fairly easy to be a bit dismissive of that, but actually you've got to get your head around some of the numbers involved. That very quickly, within 10 days in some cases, you had some very large investment banks, retail banks, wholesale banks, having over 95% of their staff in a working from home environment. And they've done all of that and managed to do all of this without any disruption to the market, as in the market is still functioning as it should. Clients have been still able to place orders, bank branches have still been open, a whole range of things. That is monumentous. And all of that has been occurring, as I've said, at the same time as still maintaining client services. And this is where the banking sector perhaps can be different from other sectors. While some firms have shut down and drastically reduced operational activity and economic activity, the banking sector has been critical to the government's, well, being a critical conduit to implementing the government's economic recovery and stabilisation plans. I've seen things that I've never actually seen before, which is pretty remarkable in terms of the way that traders have been able to continue to work from home. Back office staff have been continuing to work from home, despite legacy systems not really having that functionality or never having been tested on mass before. So it's just remarkable. We are now, however, well and truly in the frame of thinking about a return to normal operations. And I use that term very, very loosely because I think, and the sector's view is that normal operations will mean something drastically different in the medium term than it is the long term. There are 3 broad areas where firms are really getting their head around at the present time. One is how to make the workplaces safe and compliant with the socially distancing requirements, which are still prevalent. You wouldn't know it from looking at the parks and stories of people descending en masse to the beaches in the last couple of days and taking advantage of this absolutely fantastic weather. But broadly speaking, the government's advice with respect to workplaces hasn't actually changed all that much. If you can work from home, you should still work from home. Now, the financial services sector is broadly taking that to heart. And in actual fact, there has been relatively only low-level moves to move staff back to a more normal operating environment. So there's been drastic changes around offices and workplaces and how to make these socially compliant for when staff do eventually come in. I think the second thing is to get your head around is that actually firms that are planning for return of staff are only planning on having a small minimum of staff returning back to the office. Some of the biggest UK finance members are only planning to have a relatively few number of phases, and even in that case, having only 50% of staff back in the office in the medium term, and for the rest of the staff, still have them working from home until the end of the year. Okay, and the third thing that they're getting their head around is for those staff that actually do have to come back into the office, okay, what kind of mitigants do we have to have in place to make that safe beyond the socially distancing when they're actually in the office? And the two things that we're really struggling at the moment with and getting your head around at the moment is the provision of PPE and working in line with the government guidance around PPE, but also engaging directly with staff to understand what their needs and concerns are. And the second item is with respect to public transport. We would all remember a few weeks ago when Boris Johnson addressed the nation and effectively congratulated us all for the work that we've done, and then encouraged us to go back into work, but not to use public transport while we're doing that. Well, that's fine. And for some people, there is a capability to ride or walk into work or even to drive into work. However, for example, the way that the workplace guidance has been framed, this creates real challenges in itself. I could ride into work, wouldn't be a problem, but at the height of summer, I'd expect to have a shower at the other end of it. Well, actually, the workplace guidance makes clear that you shouldn't be opening shared shower or gym facilities on site. So firms are really grappling with the idea of people sitting around in their lycra stinking the place out for the entire time and what that actually means. Kitchens and common areas, very challenging. Okay. And the last thing, just to bring your attention before I hand back over, Paul, is firms are really getting their head around at the present time via the POC, thermal imaging and temperature checking. A lot of firms now are actively considering or will be introducing temperature checking at the entrance to their buildings. Now, if you're a HSBC and you own your entirety of your building, or a JP Morgan and you own the entirety of your building, that is relatively, and I use that term loosely, easy. But if you're a smaller player, if you have shared occupancy in a building, you've actually got to engage with the landlord. You've got to get your head around the way that those systems will work. You've got to get your head around the data protection obligations. How do you ask staff, okay, for information which under GDPR is considered personal and important? What do you do with that information? How do you feed it back to them, et cetera, et cetera? So that's a fairly high-level view as to the operational challenges that firms are really dealing with at the moment. The last thing I'll leave you, Paul, before I leave it there, is that, you know, for many firms, in the face of all these challenges, you know, PPE, how do we, you know, get this to staff? What do we do with it when they're in the office? Do we have biohazard bins and that sort of thing? How do you treat staff who are commuting in? What facilities do you make available to them? And the thermal temperature checking. Many firms in the face of that are simply just taking the decision that actually they're not going to transition staff back into the office anytime soon because it creates more questions than answers. Which actually gives them a more longer term time frame to think about some of these things in greater detail.
Yeah. So Andy, thank you very much for that. I think what's fascinating is that a number of those insights I think will resonate across sector, across industry to many people looking to remobilize those businesses. The question coming in, I think they're at the heart of that around. And you know, I'm sure the answer here for financial services will be very similar to other industries as well. But what are your views, or what do you hear the views are from financial services firms on future city office space requirements versus satellite offices or more temporary office requirements?
Yeah, look, really good question. Something that I think everyone, whether it's financial services or not, are trying to get their head around. What does this mean for the nature of working in the medium term and the long term? In the medium term, it's dealing with the specifics of the COVID-19 outbreak and keeping staff safe. And as I said, for most firms, those plans involve significant numbers of staff still working from home. Now, of course, that leaves absolutely legions of offices with space that's surplus to requirements. I think in the long term, we're going to see a shift. There was always a real reticence on behalf of financial services to really allow mass working from home for a couple of reasons. One is that firms really had to be quite comfortable with the risk and compliance and control frameworks that they had to put in place to manage that. And speaking quite frankly, there's a lot of people in industry who could never get their head around that, except for in exceptional circumstances. The second consideration was the view of the regulators. We've always been regulated, our sector, in a particular way. Now, financial services is a heavily regulated industry. So you can't do anything really without running it by the FCA or the PRA. Well, actually, what was so amazing about this scenario is we were all in it at the same time, and frankly, there was no time to think about it. If you'd gone to the FCA 6 months ago and told them that you had banks of traders now sitting in their front lounge room trading $100 million a day, the FCA would have lost their minds and insisted those people in the office. Now we know we can do that. So there's an element of really trying to understand what the regulators' future vision of work is. But in a very practical sense, I think what we'll end up seeing is a deeper understanding of actually where cost savings can be made. Historically, when firms talk about cutting costs and reducing expenditure, what we're really talking about there is firing people and letting people go or getting out of various business lines that don't have they don't have a return on capital which is appropriate. Now, banks can really look closely, financial services firms can really look closely at their physical infrastructure. There are some firms that already have mandatory 1 or 2 day working from home policies, but that becomes because their offices simply aren't big enough for their staff. Well, now we may well see this kind of activity being incorporated into people's contracts, into their working week, and really trying to actually make this way of working a more enduring way forward. Yep. It'll be fascinating to see.
So, Andy, thank you very much for that. I'd like just to open it briefly to either questions, perspectives from the floor, or anyone else. Anyone wish to share some questions or thoughts for a couple of minutes?
And Paul, just one quick thought from me, just a little bit, and picking up on some of the things that that Andrew just said. I do think one of the interesting things I think we're seeing with a lot of our clients is sort of this: how do we maintain this sort of pace of innovation? So Andrew talked a little bit about some of the regulatory barriers being removed because I think there was a perception of there was a need to do this. We didn't have the time to think. We didn't overthink it. We didn't put some of those barriers up. And I think we are seeing a number of clients starting to ask the questions as to how do we maintain this sort of culture? How do we maintain this way of working as we come back into the new world? Because I do think you'll find many organizations feeling that they've got an awful lot of things done that would have taken them months, if not years, to have done previously in days or weeks. And I do think there's an opportunity for organizations to really just step back and almost challenge themselves to, well, what were those things that would have prevented us from doing this and why? And starting to then look at how can we dismantle some of that where it makes sense. So some of the challenges and risk avoidance made sense. But I do think one of the characteristics, and we talked a lot about digital maturity, one of the characteristics we see in mature digital businesses is that there is a willingness to embrace and take risk, which many traditional businesses don't. So when we look at risk management in a traditional business, we think of it often in the context of risk avoidance. Whereas when we look at risk management in the context of a digital leader, it's often about, are we taking enough risk and are we pushing ourselves to try and do certain things in different ways? So I think that's one element. The other element, and perhaps I'll pick up a little bit on this later when perhaps I have a bit more time, is this mindset of, do we go back to the old way as a stepping stone to the new norm, or can we try and get straight to the new norm? Because I do think you'll find organizations drifting back into old habits and then finding those very difficult to break. But I'll pick up a bit more on that later on.
No, thank you, John. I think that resonates with some of the questions we see here as well. For example, not just the commuting point you mentioned, Andrew, but actually then how you manage lifts in large buildings as well, because everything you mentioned is then compounded by how people actually get into the building in a logical way. So look, thank you ever so much for that, Andrew. I'm sure a lot of those themes will come back to. I'd like to turn to Sonil now, and Gary, if you could just be ready in the background with that screen share. Sonil, in many senses, we're passing through a medical crisis and may now be facing a business crisis with a deep recession. Can you talk us through, Sonil, some of that invoice analysis and day-to-day analysis you've undertaken, and use some of that empirical evidence to show us how things have changed during the pandemic and during lockdown, and where we might be in that cycle and what might be coming next?
Yeah, absolutely. So thanks very much, Paul, first of all, and the folks at Protiviti, Robert Half, for inviting myself and my colleague Rob Harvey on the session today. Really pleased to be here. It's great that everyone's online as well and ready to hear about Sidetrade's point of view on the COVID-19 crisis from a resilience perspective. Can you guys hear me? Can you hear me okay, Paul?
We can hear you. I can't see you. I don't know if your video's on, but
do you want to see me?
No, you're fine. No, you're fine. Mic on.
I was one of those guys. I was one of those guys that got the kids to give me a haircut, so it's not looking too good at the moment. That's why I had my video off. But
don't worry, we're sharing the screen, so
thank you.
So hopefully those of you who are on video can actually see this. And I know, Sonil, you're going to bring this to life a little bit and talk through.
I will do. Absolutely, and I've put a link on the chat as well to this invoice tracker. But listen, I know that Homes Under the Hammer is going to be on soon, so I'll try and be as concise as I can. And whilst I can't guarantee a quick profit or decent rental yield, we can help with insight into payment delays as a result of the pandemic, and also some trends we've seen in the market since this first erupted. As mentioned, my colleague Rob Harvey is monitoring the chat and ready to answer any questions that you may have. Based on the information that we share with you. And just to stress that the graphic that you can see now is interactive. It's freely available as well if you want to have a look at it in your own time. So Paul, when talking to our customers and others responsible for the financial well-being of their businesses, it was very good to know many had plans in place to perform risk assessments on their threat to working capital, and they had various levers at the time that they felt they could pull to lessen the impact and thus dampen the short-term liquidity issues they could have potentially faced. These included speaking to their credit insurers, looking for government support. We know the various schemes that are out there, factoring or dynamic discounting, and also payment extension terms, to name but a few. However, for our prospects, so these are the people we're actively engaged with in a buying cycle, we quickly realized they had a process crisis looming, and this disruption was about to hit them hard. And why was that? Well, it was pretty simple, actually. How do you move your entire accounts receivables team from an office using an on-prem finance application, in many cases a very large, unwieldy legacy application, into a cloud-based application to go around collection activity? How do you manage simple things like connectivity, security, access to other systems that hold all this client information? And in the meantime, the clock's ticking and invoices are getting later and later. And how was the head of finance or AR ever going to manage their team and get real insight into how the risk was changing on a daily basis and monitor non-payments to see whether they were increasing or not? What they quickly realized that by missing the shift to digital, which we've spoken about a little while ago, the post was no longer being opened, the phones were no longer being answered, and this has now resulted in higher DSO, days sales outstanding, cash becoming harder to generate, but also increased risk of default or non-payment, because the greater delay on the invoice, the less likelihood there is of that invoice being paid. So what we saw were businesses not equipped to deal with remote working and others that were. But we also saw that businesses that embraced digitization of their AR function in particular, they were much better prepared for the inevitable downturn in the slowness of payments. So we know what the market and the prospects think, and we also know what the process crisis means to businesses. But what does the data actually tell us? Because generally speaking, the data doesn't really lie. And this is borne out in the numbers. And is this borne out in the numbers that the payments are indeed being delayed? To help us answer this as part of a three-pronged approach to help our clients, prospects and the wider community, including the French and British government, Sidetrade produced a unique interactive chart called, imaginatively, the Unpaid Invoice Tracker. You wouldn't believe we actually employ a marketing department, would you? The other two initiatives were making use of the payment plan module free to our customers, as we anticipated an uplift in these requests. So obviously organizations struggling to make payments will be looking for the ability to split an invoice over a period of time. It sounds very simple to do, but actually in reality, to do that in a finance package or using Excel is very tricky and difficult. And we were correct in this assessment because our BPO operations in Dublin quickly started getting many requests for payment plans. The other way we helped as well was using or giving free use of our interactive statement module that allows buyers to seamlessly connect to the platform, make notes against invoices, raise disputes, submit a promise of payment, or indeed settle an invoice. But coming back to the unpaid invoice tracker, using data we've accumulated from our largest regions, so basically the UK, France, Belgium, Netherlands, Spain, and Italy, we took the first quarter's average. So Gary, if you could just maybe just go to the UK flag, please. And then if we look at the blue line that's running horizontally across, you can see this was the average prior to the pandemic. So on average, invoices over 10 days past their due date were about, on average, about 14% there, but I think it's close to about between 14 and 30. There's a kind of fluctuation. Sorry, 15 or so percent there. Now this payment experience was based on 3.6 million buyers. So these are unique buyers of goods and services from our customers. They represent about 26 million invoices and about 54 billion euro of turnover. And as I said, if you're unable to follow what we're showing on screen, there is a link in the chat as well that Rob's kindly put there. And what you'll see is that from when the pandemic was first officially declared on the 10th of March, I think a date that everyone will remember, you can see that there was a kind of business as usual for a short period of time, and then there was certainly an uptick. And what you'll see here is that if you scroll along, if you go up, sorry, Gary, if you could just get the blue bar that's being hidden at the moment. So if you just scroll up the bar, please. So go to the right and go up. The bar on the right, just scroll up a little bit. Can you, if you go up, sorry, to the top of the graph, that would be really great. Other way, sorry.
Don't worry,
basically,
Sonil,
what you get there essentially, yeah, what essentially you get there is an assessment or an average of what's actually happened from a consolidated point of view. But if you look at the tracker itself, as you can see, we're updating things on a weekly basis. You're able to look at the other regions as well, and you can also have a look at how all the regions are performing. And if you look at the all, what you'll see here as well is that actually the UK, where we always think that the Italians are notoriously bad at payment, actually it's the UK that have spiked significantly during this pandemic, and actually we're the worst performers at the moment from a perspective of these delayed payments over this period of time. As I said, you're also able to switch between the volume, so the number of invoices, the 26 million or so invoices, to a value, so we can look at the value in terms of what percentage of cash is being held up. And this is, I think, really where those liquidity issues are going to start to now raise their heads. And one of the things you asked Paul was, well, okay, look, we can see what's happening now moving forward, and what does the future look like? One thing I would point out is that our customers, this is our customers' data that we're using, and these are customers that are using the Sidetrade augmented cash platform, and they're still experiencing these significant delays. And what we would say is that organizations that have still yet to embrace automation, digitalization within their finance department, and particularly within their AR department, I think they are going to struggle very much with this, as they don't have the correct tools or processes in place to potentially get the cash in through the usual ways. So that was just our very kind of high level overview and assessment. As I said, it's an interactive tool. you're more than welcome to go to the Sidetrade website and to download it, or sorry, to interact with it and get updated weekly as we make the data available on a Wednesday, usually at midnight. The latest data is published. Happy to take any questions as well on that.
So, Sonil, let me just take some of the points coming through. I mean, is some of what we see here due to extended payment terms, process inefficiency, or a lack of cash to pay? Do you have any insight into that, and also where you think it might trend?
That's a great question. I think what we found was initially, when the pandemic came along, there was really a mix of, I would say there was a mix of all three, because people were still paying invoices. And if you look at the tracker going back at the beginning of the pandemic, you can see there was still relatively a flat, payment behavior. But I think, as I said, now people are starting to begin to use different levers to try and reduce their working cap exposure. I think they're looking at things like factoring and invoice discounting, and certainly the payment plan as well has been much more popular, and organisations wanting more time to pay invoices and potentially negotiate better payment terms. Just on the payment terms thing, Paul, one other element that we haven't talked about or shared, but is available to people that work with Sidetrade, is the ability to compare how you're being paid by the same set of customers you're working with and how they're paying other vendors. So you can also see where there's a disparity where they may be asking you for extended payment terms, but still paying other suppliers as per normal. So that gives you good insight in terms of protecting the AP as to how you should be setting your payment terms.
Okay. Sonil, thank you very much for that. Can I just open it? Can I just open to the floor for questions? Any comments, reflections, questions for Sonil? Okay. Sorry, something coming through on the chat, Sonil. What are the views on the economic recovery patterns in terms of the different countries coming through here, and the V, U, and L curves in the UK that we see?
I feel like giving the Jurgen Klopp answer when he was asked about the pandemic. He was saying, "Look, I'm just a football coach, I'm not the the global head of WHO." I mean, I think it's going to get it's going to get worse for lots of organisations. When we look at the payment delays for many of our customers and in our BPO operations, we do see that organisations are struggling. But I do think this is also an opportunity for the Office of the Finance Director, for the for the Head of Shared Services, to now push this type of automation up the agenda of them. And I do also think we're going to see a greater risk of bankruptcies as well. So I think, again, organisations that are able to go about cash collection activities in a far more efficient way and almost in a business as usual way will stand a much better chance of getting paid, and therefore come out of this stronger and more resilient, and also have a bigger market to play in because there's less competition. But I think it's very tough to call what that's going to look like.
Okay.
But thanks for asking, Emily. Thank you very much, Paul.
No, Sonil, thank you very much. I think a lot of what you said there is going to be relevant to the businesses here on the forum, but also particularly in terms of the next conversation we're having as well. I'd like to bring in Chris now from KFC as we move from that industry and that macro perspective to very real stories on the ground. With over 25,000 restaurants globally, 1,000 in the UK, of which I think about 500 are open, KFC has really started to remobilise and keep us all fed. Chris, can you talk us through that mobilisation, how it's working in practice, some of your key stakeholder groups you have to manage, and where you think those key challenges are as you move ahead?
Sure, no problem. So I think if no different to a lot of companies, our two key stakeholders have always been our people and our customers. I think this one we introduced a third one here, which has obviously been the government and their views as to whether we should be open or not. And so I think as when we closed, the first thing we did was to actually look through all three stakeholders. Firstly with our people. So we have about 26,000 people in the UK, and it's an incredibly uncertain time for a lot of these people working in individual restaurants. It's not like one head office where you can capture them all in one go. You've got to speak to them all personally. So we mobilised quickly to actually just talk to all of them about what was going on, talk to them about furlough, talk to them about what we were doing, and then also just as they went off, when they were off on furlough, just making sure that they were up to date with what we were doing. And then spent a lot of time working with the government and understanding what their views were. And I think what a big highlight for us is actually the government's made up of a lot of different departments with lots of different views, and actually it's bringing it all together. And as soon as we brought in some consultancies to help us, as soon as we started active dialogue with some of the ministers, we started to get a sense of what actually the government wanted us to do, and that was incredibly helpful for us to start thinking through how could we reopen in a way that was consistent with what they were saying. And then that just led back to our people and how could we bring them back and protect them when they're back in our restaurants. And I think the final one is just our customers, where we just spent a lot of time understanding what our customers want. And I think actually they're interlinked with our people as well, that our customers, and I think customers on a whole, there's a real big push now towards social purpose. And actually, if you're not looking after your own people, customers will start to trust you less and have less confidence in you. So how can they actually come and enjoy KFC again in a way they feel confident and comfortable, but also how are we treating our people and doing right by them? And as you see, KFC today looks very different to how it looked eight weeks ago, with a lot of additional measures in place, as you can see, from social distancing to different protective gear, etc., that our teams do wear. And whilst we're open yet, we haven't obviously opened up all our channels because we're waiting for just the final go-ahead from the government to reintroduce kind of dine-in into our restaurants.
No, that's great, Chris. Can you just give us a little more insight then into some of the measures you've taken in terms of the stores as well? Because I mean, some of that will resonate, I think, with what Andrew Rogan was saying earlier from UK finance perspective. But what are some of those practical steps you've taken in order to protect your customers, but also give that brand comfort to your customer base that actually they can come and safely get food from yourselves?
Yeah, I think it's firstly important that we restaurants, but none of them are the same, if that makes sense. So we have a large amount of drive-throughs, which are probably the most consistent types. But when you're looking at social distancing, you have to look at absolutely every single restaurant individually, and design your layout and your kitchen where so you can get social distancing, and that won't work for every single one. So every single restaurant's been reviewed. And it has been zoned out, so we can maintain the 2 meters where possible, social distancing. I think the first visible sign, if you're a customer, you come to a KFC, is the sneeze guards or the plexiglass around. So that's not just as you come through a drive-through lane or delivery driver collects. That's also, you see that we start to put that into our kitchen as well, in between team members, as well as working through both gloves and masks where the team members do want it as well. So I think it's one where again, it's actually like a lot of this is to do with our team members as well, and asking what they would like, what they actually having it available to them so they can choose if they want to, and certain other areas where we do actually mandate it because it's very important, such as the social distancing and also the zoning. I think the biggest bit that we've spent a lot of money on is actually a lot around the signage as well. So actually it's all well good putting these measures in place, but unless you are triggering people and reminding them all the processes, like our customers and also our people, then actually we're not doing our job right. So actually the amount of signage around all of our restaurants, be that on the pavements or for our customers, standing spots, or even into our back of house, is actually increased significantly. But that's a key point of how we feel comfortable, as well as just the messaging and the continued conversations we're having with all our restaurants to remind them of how important this is, because it's one where like the safety of everyone is our critical concern at the moment. And that means at times if we need to kind of turn a drive-through lane off or turn off delivery, we will do that if it gets too busy or we can't adhere to it. There is no compromise in that regard. If it gets too busy, we will slow it down.
Okay. No, thank you very much for that. I mean, there's quite a few questions and comments coming through on the chat. First one, Chris, what's the approach you've taken to 0-hour contracts, and how have you worked with this group of employees in terms of your own stores and also the franchise stores as well?
Yeah, so we don't have any 0-hour contracts. So that was an approach we took about 4 years ago, and actually we never really focused too much. So we don't really have that issue. What I would say is we are all monitoring contracted hours versus the actuals we've had. At the moment, we don't have too much of an issue, but what we would never want is to bring someone back off furlough and for them to earn less than they were beforehand. So we are actively monitoring that, but it's a case-by-case example. But for us, I see a report every month of where people might not be earning as much, and for our equity restaurants, and we've definitely made a top up there. But I'd say that's that's a very small minority. The majority of people are earning the same, but we don't have any 0-hour contracts.
Okay, so a subject then that we discussed in previous forums where we've had some of the elements of your supply chain here into Sisters Group and similar companies as well. How have you managed to switch on that supply chain, given that the disruption that we've seen around COVID may well be affecting some of those as well?
Yeah, I guess it's one where I think that the number one thing is maybe it comes back to your previous talk as well, is actually we've got a very active dialogue, and we always have done through with our suppliers the entire time, and shared transparently as to where we are and what our plans are. And that was both in the run up to when COVID first hit the UK, where we were worried about the availability of supply, to now when we're increasing our volumes. And I think it's just through this active dialogue that we've been able to maintain our suppliers, be able to maintain the volume, and as we want to increase, we've been able to. So we haven't had any challenges, but I think the key point there is there hasn't been a single supplier that we haven't spoken to or battered down the hatches. We've just spoken to absolutely everyone, so they actually understand where we are and what our plans have been.
Okay, so as we then look into what this is going to look like over the course of the next few years, I saw something on the news last night from M&S saying they think the future of kind of high street retail stores is going to change and shopping habits are going to change. Do you think the balance between those traditional outlets and drive-through is going to change in the long term? Do you think your revenue mix in that sense is going to alter materially?
Yeah, I think it's I think yes. I think, but I think what's very easy to do when you're in the middle of the crisis is just to focus on the here and now. And so, when we did close, we did do all the right things. We focused on working capital. We focused on cash. We focused on how we could just understand all these types of support that were out there for us. But then as soon as we had got that covered and we were starting to think around reopening, we started to move what we call System B, what does the next 6 to 9 months look like? And it's very easy to look at your P&L over the next 2-3 weeks and go look at all these additional costs coming in from all of these masks and gloves. But actually the really key challenge for us is to look 6-9 months ahead and go, well, what does our P&L look like in maybe the autumn? But also then what are the opportunities to actually address what you're saying there, which is changes in consumer habits. And I think someone on the conversation talked about digital. I think that is something that was coming anyhow. This has only just accelerated it. You could go into a KFC or a McDonald's or a Burger King and you'll see kiosks have been there for years. I think this will only accelerate other types of digital platforms where customers will actually want to access people without necessarily having that human contact in the first place. So that's a journey we're on ourselves, we've been on, but the urgency behind it has accelerated from that. And we're looking at, rather than just looking at this as what are all the additional costs of COVID, what are all the additional opportunities as well, where we can still march on our competition and actually grow through this. We have a mantra of never waste a good crisis. So what actually are we doing to make sure that we can get the benefits out of it?
I think that's never wasting a crisis, I think, will be an accent that again will resonate with a lot of people. Jonathan, I'm going to come to your point around the point you've raised in the chat in a moment. Can I just open to the floor? Anyone have any questions they'd like to ask directly to Chris? Okay, Jonathan, would you just you said a lot more eloquently than I'm about to read this out. Would you like to just put that point to Chris and see what his thoughts are around that?
Yeah, so I guess the question I was asking, it linked a little bit to some of the finance comments that Sonil was making earlier on, was around there was talk about people not receiving invoices and therefore some of the payment not happening just because people weren't physically there to receive it, and therefore digitalization was the answer. And given my digital role, I'm obviously supportive of the digital message, but I was wondering to what extent actually potentially just workforce shortages is as big a factor, with organizations taking, I'll use these words cautiously, but excessive advantage of the furlough scheme to sort of manage cost, when ultimately there's work that needs to be done, but ultimately as we're looking to manage costs, cutting potentially people out of a finance team to manage costs, combined with some of the homeschooling challenges, so people actually declaring themselves unable to at least work at full capacity.
Yeah, I guess from a KFC perspective, we didn't furlough any of our corporate head office, so we've been active throughout, and so we haven't seen that. And we were fully digitized beforehand, so we were using cloud platforms for our for our invoices. So actually we weren't in a position where we've got cases where invoice arriving, there's no one there to collect it. The real challenge, I think, is what someone said earlier on, is which is the process. So we're a US listed company, so we do this Sarbox, and so actually we're having to adapt massively to even just to authorize payments, because a lot beforehand a lot was in paper and people together. So I think it's not something we've seen, but it's absolutely, I could absolutely see that with a lot of other people when you look at furlough, especially some of the smaller companies then, and you have shared roles, if that makes sense, where people are doing a variety of roles, and actually you put them on furlough, then your back office will come back. So I think it's one where I recognise it, but probably we haven't seen it ourselves.
I'm sorry, I think if there's someone asking a question, it's very difficult to hear you, but maybe a question I can take maybe to, I think particularly Rogan and to Chris. I mean, it's as it's Mental Health Week, just looking at the employees, and actually from, I guess from your perspective, Andrew, into your member firms. So how Chris, are you particularly looking after the mental health of your employees, who must be in very stressful roles, particularly now you hear stories about some of your centres being full to capacity in terms of customers queuing there. What initiatives are you taking to look after your customers who keep your business running? And maybe Andrew, if I can turn to you after that, in just terms of some of the initiatives you hear in the finance space as well.
Do you mean customers or staff?
Sorry, your staff. Apologies. Yes, your staff.
I think it's one where just from our perspective, we've always had a very well-established way, like program of how we look after all our team members. We've always said we're a people business that just happens to sell chicken and chips, and that's been a mantra that's been flowing for the last 20 years. And so actually, if I think about it, it's the communication and everything has been established. It's actually relatively easy for us to talk to our teams, and we do a lot around looking after them as best we can as well. I think the first thing we did, and this is the most immediate thing when the crisis hit, was actually set up a big hardship fund, because actually the most immediate concern for a lot of our team members was actually financially, and so that was the first thing we did, as well as just constant dialogue, communication, and if you've probably said it 5 times, you haven't said it enough, and so we just continue to reiterate the same messages time and time again and talk to them, as well as every restaurant has a very empowered restaurant manager who looks after their team, is very proud of their team and talking through. So there's a huge support network that's been there for years, and we've just mobilized it and just given it even more importance than ever.
Okay. No, thank you. And maybe, Andy, if I can turn to you then, if you see some of the chat coming through as well, it's not just mental health awareness, but also then how that duty of care in your industry you see extending to people working from home and things like that. Can you just share some reflections on that? And you're on mute if you want to do so. I think you do.
Yeah, look, thanks very much. And look, I actually find the previous, I think it's Chris, some of those insights are really interesting. It's the financial sector, in particular, the banking sort of workforce, is in a slightly different scenario, and actually the vast majority of people have continued working. And there's 2 environments actually which are really important. One is branches. Banks have kept branches open, at least to a bit of a reduced degree, but nevertheless, they've still had to maintain that service continuity. And when this crisis first came about, the big concern was actually about keeping those staff safe as they continued to work. And so what you saw is within branches, a lot of proactive steps and imposition of mitigants within those branches to try and minimize exposure and keep customers safe. What we found is that over the course of this crisis, as it's developed, the concerns of staff, particularly with respect to infection, has generally grown, especially as, and quite unfortunately, members of the public have to various degrees followed the social distancing guidelines to various degrees. There have been some terrible cases where staff members have been spat at or abused in a bank by members of the public who are unhappy, and there's been a lot of measures put in place to try and minimize exposure and try and really communicate, not necessarily just to the staff, but also to potential customers, telling them to stay home unless they absolutely need to stay home, but also the people you're dealing with are key workers. There's been a real shift, however, with respect to the way people are thinking about it. We're now thinking about staff welfare in the context of returning to work. You cannot bring people into the office and back into the office who ostensibly could be putting themselves at greater risk by doing so. So there's a real proactive means to try and engage with and consult with staff, not only as to what their mental health measures are. So there's a lot of banks, for example, that have rolled out apps, sort of daily check-in apps to some of their staff. There's been a sort of big push for intense online management, and I'm sure we've all done the pub trivia Zoom thing throughout the course of this particular crisis. But finally, it's really trying to understand for staff who are going to be asked to come into the office, how they feel about that. If they have any vulnerable customers within their, vulnerable family members that they're concerned about, or if they themselves actually are concerned about their own health. And the way firms have been doing that is by proactively surveying them, rolling out apps, and asking hard questions.
Andy, thank you ever so much for that. With a view to the time, what I'd just now like to do is just turn, as we do each week, to a Protiviti perspective, but turn to my colleague Jonathan. And Jonathan, just wonder if you could just draw on some of those threads, particularly focusing on your views around the innovation culture, how we move straight to whatever this new normal is going to be, and think about how we should approach some of the innovation and maybe what we've learned about innovation during this period.
Yes, Paul, thanks very much. And I'll just give a few quick thoughts. I think, first of all, and I did touch a little bit on this earlier, I think organisations need to challenge themselves as we talk about where we've gone from, where we are now, and there's a lot of conversation around new normal, the world will never be the same. And I do think organisations need to really think about how they, if possible, go straight to that new normal and don't try and drift back into the sort of hybrid halfway house. And I think part of the challenge is people will see, and we haven't really talked today about the positive side of some of the experiences that organizations have had. And I think there are quite a few organizations that have said certain things have worked much, much better in the 100% digital world than they did before. And we heard people like the chief exec of Twitter talk about actually they're going to change their working practices forever, because actually there are many things about the way they've been operating recently that have been more effective, more efficient, not to mention the cost savings that potentially come with office space and some of the other challenges. And as you go from 100% digital to hybrid, it becomes much, much harder, because we suddenly get back in a situation where, well, half the people are now in a physical meeting and the other people are trying to connect in remotely, dial in, and all of a sudden we'll be back where we are. And so I do think people need to think quite hard about how we avoid that interim state, if they want to avoid that interim state, and try and see if there's a way to go direct from one end to the other. And Protiviti, we've been talking about absolutely changing our policy. So whereas historically it would sort of been more the mindset of you need permission to work from home and to work out of the office, maybe we need to reverse that 100%. And actually, you almost need permission to be utilising office space and to be coming to the office, because we'd actually encourage the more digital, more remote experience, because it's been more inclusive nationally as well, where we're slightly London-centric, and the people in the more satellite offices perhaps have felt like second class or a little bit excluded, whereas in the digital world, they're as engaged and involved as everybody else, same with working parents. One of the other quick comments I'd just pick up on is the benefits of innovation. We touched a little bit on some of the amazing achievements people have had in terms of reinventing their business. Andrew talked early on about getting from 100% more or less in the office to sort of 90% working from home in a matter of days, and being able to make those types of things happen. And organizations, and many organizations, asking how do we maintain that mindset and how do we maintain that culture? I think having seen the benefits of innovation and an innovation culture, therefore saying, well, how do we reinforce that? I do think one of the things worth saying is an innovation culture, which I do think is a characteristic of leading organizations in the digital age. They tend to excel in innovation culture. And there's lots of data and statistics that we often present that talk about this. Doesn't happen by accident. And I think to some extent it's been forced on people. And therefore, because of the requirement to do things, the force, the deadline, the pressure, the need, people have made things happen and have demonstrated how innovative they can be with the right catalyst and the right push. But there's a lot to designing and building and embedding an innovation culture within an organization. And I think organizations need to step back and think a little bit about that in a more active and conscious way, rather than just hoping it will carry on and hoping it will happen as they move forward. Conscious of time here, Paul, so I'll wrap up there unless there's I'm happy to take up any questions, but plenty I could say, but I'm conscious of time.
No, thank you very much for that, Jonathan. And I think we can come on to a lot of those points next week as well. I'd like to thank all of our panelists today. I think there have been some fascinating insights, and I hope there are some parallels there to a lot of what you heard about how your business is and some of the challenges that you're facing. Some fantastic kind of positive notes there from Jonathan about how we embrace that innovation culture and make the most of it. And I think that will be a continual theme over the coming weeks. So our next forum is next Thursday as normal, same time. Again, we have a range of panelists we plan to bring to you then to just to give you that range of perspectives around how people are remobilizing and how they're applying innovation. I do apologize if I didn't get to your questions. There were lots coming through, so thank you very much for that, but hopefully we hit on most of them. We'll be sending notes out very shortly, so you have write-ups of this. So please send us your feedback, and I'd like to thank you all for attending and taking the time. So all that remains for me to say is thank you very much once again to everyone. Stay safe, thank you, and we'll see you again next week. All the best.
Cheers, Paul. Thank you.
Thank you, everyone.
Bye.
Thanks, everyone. Thanks to the speakers. Great job. Thank you.
Thank you.
Andrew, thank you very much for that.
No, not a problem. So thanks for inviting
really...
me. More than happy to come back at a future time if you need me to, or if there's anything else I can help you with, let me know.
That's fascinating, and I think to have you on there and sharing your perspectives will always be good, because there are a lot of financial services people on that. So that was really useful, and I think you made a point yesterday as well around the kind of culture being framed by the bricks and mortar. Getting onto that as well, I think would be a good point as well about how we evolve our culture. But thank you ever so much.
No worries. I enjoyed actually hearing from the other speakers as well.
Andrew, hi, it's Layla from Robert Half. It's nice to meet you. I don't know if you saw. Were you keeping up at all with the meeting chat?
Yeah, I was actually. I was trying to. I'm wondering if I could. I was trying to work out if I could privately message some people. But there you are. I kept up. Yeah, I saw some
personality. Some people can, and some people. I'm not sure if we're hosting the meeting. If you can, as an external participant, I think internally you can, but I'm not sure you can when we're hosting externally. I don't know if you saw the conversation that I was having a chat with Buck Rogers from HSBC and Matt Collington as well. So we'll take that conversation offline. Don't know if there's an opportunity to get you involved in that. I think at this point it's just a conversation. But we were just talking about, it looks like it's going to evolve into a conversation around, working from home, risk initiatives around that, being aware of what could happen and really, prevention of something happening, which I think is a great conversation to sit with Protivity as a forum host for that. Is that something that you'd like to, would you like to be involved in that? Clearly, it's just a conversation at this stage.
For sure. Look, I know that a number of our members through the BOC are actually, one of the things they're struggling with is, they realise they're going to have significant portions of the staff spread over sites. So, they're still going to have a group of people working from home. They're still going to have a group of people, in the office now. So there's big questions around what does that mean for culture? How do you supervise that? How do you report that? How do you do a range of things to it? And it's challenging. So look, by all means, please do keep me in. It is culture.
We also deal on the executive search practice. We also deal with a number of non-executives as well. And I've been having, conversations with the non-execs in this very new world about when they're sitting on the board, when you're a non-executive and you have a duty of care and custody, governance, risk, and compliance.
Yeah.
But you are, physically attached. You have to remain independent. There are some quite interesting conversations and challenges for individuals coming up in that arena as well. How can businesses and executives provide the non-executives with assurance in this new world on a long-term and sustainable basis? Well, the answer is, as at today, not very easily, actually. So